We all know that more millionaires and billionaires are made with real estate than any other vehicle, and rental properties are the vehicle of choice for creating passive income and building long-term wealth. My friend Robert Syfert joined me on this episode, which has become the award winner for the best FlipNerd show of 2016 for building a passive rental portfolio. Let's go ahead and start this great episode. Robert, welcome to the show, my friend.
Hey, thanks for having me, Mike.
Yeah. So I'm excited to talk a little bit more about, today, everybody, we're going to talk about building wealth through rental properties. And this is such an important topic that honestly, we've had a number of shows on this in the past, but we really haven't had a whole lot this year, I don't think. I think we talked about it it was like a glut of this topic maybe in the middle of last year. But something we probably haven't talked enough about this year. It's such an important thing. I could tell you personally, we have a rental portfolio that for a long time we're looking at it like, is this worth it? Is it worth it? You know, and we're getting a bunch of debt paid down and stuff like that. And so we've probably held the average property in there for 7-8 years now, and we've been paying them off pretty aggressively. And then now we're starting to see it. We're like, man, this is pretty good. We should have kept more. You know, so anyway, I think it's a great topic. So I'm excited to talk to you about it today.
Awesome. Yeah, I mean, It's easy to say what you wanted in hindsight, right?
Absolutely. Especially when the market, when we bought most of them, like I said, average 7 to 8 years ago, it was a very different market. So now when we look out there, we're like, man, we've seen what's happened to in fact, we just got all of our in Texas, we just got all of our tax bills. So you start to see all these appraised values, and which, some of them we protest, but at the same time we start running comps and we're like, wow, that house is worth this now? Like, it's crazy what's happened. And we're like, man, we should have like kept double or triple that, over the years. So, hey, before we jump into this topic, Robert, why don't you tell us a little bit more about yourself and your background?
Yeah. Okay. So, guy that's been passionate about real estate my whole life. But worked a corporate job in estate planning and mortgages and things of that nature. So long, lengthy time in finance and estate planning and protecting people's wealth and transferring it on to the next generation. So spent a long time there, and then just got full bore into real estate, chased my passions and pursued it to give myself more time. And as you know, running a business in real estate, when you first start out, you don't have a lot more time because there's a lot more things going on in building those things and finding properties that you don't necessarily think of when you're like, I can just get into real estate and it's so easy and it makes tons of money. And it does once you figure it out and you do it all right. So spent my first couple of years figuring all of that out, and then just found out that I had a niche really in the rental space. Because just like as you've seen, all the numbers, for me, it was a very easy thing to look at because of coming from a finance and estate planning background. I looked at it from a different perspective than most people, and was just looking at cash on cash return and what other options are out there. So got really busy and effective doing that. Grew a very large company very quick, doing an average of 20 houses a month, wholesaling and rehabbing and lots of other things mixed into that, and did a couple hundred deals in just over a year. So got a lot of experience through that. Also had a management company with a partner. We managed over 500 doors at one point, and then just got to where I am now, and creating wealth for others around the country that don't have the time to put into it that I do, and just want to put their resources, having their money make money for them, so to speak, and created a model that fits perfectly for that, and started it all brand new from scratch again with relationship-driven focus. So we're very much about building relationships with people. Because our goal isn't to just sell you a house, right? It's to help you build wealth, help you pass on that wealth to the next generation. Kind of come natural to me from the background that I have.
Yeah.
But I love that I can now do that in real estate.
Yeah, it's great. And this is going to be a great conversation for those of you listening, because when you have that background of estate planning and financial planning and stuff like that, and then you can tie it into real estate, which we know is superior to most other investments out there, just generally putting it in the stock market, where people are generally fearful of more now than they were in years past, I think.
Yeah.
It is, truthfully, I've talked about this before on the show. My wife and I both have a financial background, and working in investments, and even through college and everything, that you're kind of taught like that's where you invest, right? But when you start to realize that there's this whole other world out there, and from my standpoint, I just feel like the stock market, even though that I used to like work in the investment space, is it's just like financial engineering. I don't get any of it. Like I don't understand it. I can't touch it. It just doesn't feel. I don't want to do anything other than real estate now. After you're involved with it, right?
Yeah, same experience, right?
Yeah.
It is. It's just there's so much you can do in finance, and I get it, but you're right. There's just too many ways that you can lose, in my opinion. So.
Yeah.
Most of them can be mitigated in real estate. And you're right. Now that I'm in real estate, I mean, people ask, well, don't you diversify? Yeah, I do other markets. I do other things within real estate, but that's where my diversification comes from. So
yeah, it is funny because people are so conditioned to think, those typical ways where, I mean, I don't really talk about this very much, but I've bought hundreds of houses. I've lost money on like 3 or 4.
Right.
And the thing is it's really not risky when you know what you're doing and you're working with people that know what they're doing because, by nature, not everybody is the same way as me, but we tend to be very conservative in nature. And so we've tended to do that's, we probably missed out on some deals that would have turned out all right, but we stayed safe just because that's kind of who we are. And so, it really takes a lot to lose. There's people that lose their shirt in real estate investing. Don't get me wrong, but if you're long-term buy and hold, that's much less likely than somebody that's trying to do their first rehab and live a life like they're on HGTV or something, right?
Yeah, exactly. It's really hard to make the mistakes and lose money. I'm with you. I don't think I lost money. I think I just broke even on one house was my worst case scenario. And it wasn't a rental property. So.
Yeah. Well, good for you. So folks that are listening, like our intent today is to really help separate. We're going to talk a little bit about kind of passive investing versus active investing and, where you could invest at where, Robert's got a background in helping people invest in the stock market and do other things with it. So we'll kind of talk about, that's what we're going to start at, is just talk a little bit about those are some things you could do. And then maybe here's why real estate, makes sense. So do you want to kind of share, Robert, some of your experiences about, maybe some of the eye-opening experiences you had when you were teaching people, here's what you do with your money, which I don't know this about you for sure, but typically somebody told you what to say to those people, right? What to say, right? Sell our mutual funds, or these are our products, right? Instead of like looking at maybe, you probably never talked to anybody about real estate when you were working in corporate America, right?
I sure didn't. The only person I talked to about real estate back then was actually the owners of the company. I for years actually kept going to them and saying, I really feel like real estate's a piece that there's somehow we can fit this into this model. And, just coming from the finance background, obviously it's something that they can't figure out how to capitalize on.
Right.
So that wasn't something that was ever going to get added, which led me to leaving at one point. But yeah, I was fortunate enough though with the finance company that I worked in, we catered to retirees. So those that were 50 and older. And while I was taught what was the best things out there and we had daily meetings on what was good and what was bad, the good thing for us is that I learned a lot of what you're talking about. A lot of the mutual fund stock brokerages are mostly taught on which mutual funds they want sold today, which stocks they want sold today. And what a lot of people don't realize is you may be working with one agency now, and what you'll find if you look at your portfolio most of the time is all funds that they own. Now, why is that? Because they make more money off of that.
Right.
So at the end of the day, whether you lose money, make money, go sideways, it doesn't matter. The finance company is making money.
Yeah.
And there was just some things that disturbed me about that. Now, fortunately, the company I worked for, we helped educate people on that to show them, hey, look, this is what's in your portfolio. This is not what you're saying you want. Like you say you want safety, you don't want any risk of losing money, yet your entire portfolio is at risk. And they would keep saying, well, no, it's all protected, it's all guaranteed, and this and that. But then once you analyzed it and showed them what they had, they were 90% at risk, full market risk of it. The market tanked, they went down. So we just helped educate people. And if they were looking for safety, we helped them move their money into places that were more safe, like certain life insurance policies or certain types of annuities. So we actually did a lot of annuities. And sure, that was mostly brought on by the agency I worked for. That's what they showed. And we went more towards fixed indexed annuities and fixed annuities because they inherently do actually have guarantees within their policy where you can't lose your money. Right. You may not make as much as other places, but you also don't have the downside risk that you do with other places. So we did a lot of that. And then we, because we in that company also had connections with estate planning and tax planning people, we brought them in and kind of looked over the entire portfolio and, all right, well, what are you doing to not only protect your wealth, which obviously is your first goal, but you're looking for, at some point, you're going to want to transition this wealth to the next generation and make sure it stays in your family and keeps building generational wealth. So we looked at a lot of that too, and making sure that they were set up right to avoid all the common pitfalls of probate and things like that. So it was, got a really good feeling doing that thing, but again, had a passion for real estate. So I always knew that you could do more in real estate, and I, now being in it, can really prove that to be true.
Well, let's just kind of go through like a little exercise. The way you think about this now, having the financial planning background, because typically what you'll know this better than me, but you probably looked at, well, how much does somebody have? How many assets do they have? And what is their, what's their kind of lifestyle like now? What kind of earnings or income are they used to? You're kind of helping people plan for the future, right? So you go through this exercise of saying, well, if you invest in this and you get this return, then you're going to generate this much revenue per month, or this much in dividends, like to kind of live on and stuff like that, right? So up until, I'll say like this didn't exist until fairly recently, but I think a lot of people have a hard time making the connection to say, well, here's how I go through that exercise with rental properties. Like, well, it's going to cash flow this much a month conservatively, and therefore I need this many. Over time, I'm going to pay down that debt, and I'm going to have an asset that I could, sell, or it's going to cash flow that much better. And kind of make the leap between that traditional financial planning that is probably easier to look at because there's prospectuses and a lot of like information, to something where it's all assumptions, right? Like there's no prospectus for a rental property.
No. So the leap, you're right. To me, they're really both the same in a sense if you're doing it right with the rental side.
Yeah.
So it's really why we changed the model we did a year ago. That's the right way to do it. So in that other business and finance, we would do exactly what you said. We'd evaluate the entire portfolio. The more of it we know, the better we're going to be able to help you. What are your goals short-term and long-term? Are you looking to retire soon? And what kind of income are you going to need to continue to maintain your lifestyle throughout the rest of your life, and then transfer on without losing any money to generation? So we'd analyze everything they have. And you get very nitpicky in that stuff, right? Like, what kind of fees are you paying for what you have? What kind of risk tolerance do you have, and what kind of risk are you taking? So we evaluated all that, and it'd take us several meetings. So again, it was relationships, building relationships with the client, finding out what it is their needs and wants and goals are, and then mirroring risk tolerance and things like that. So a lot more complicated because, you're doing a lot of prospectuses on what things can potentially do, and it's a lot of speculation. And inherently, the market has to do well for that to do well, for a lot of the things. The other side with real estate, for me, it's a lot easier. But we do the exact same thing. So we build a relationship, and then we're really looking at, what are your lifestyle goals? I'll give you a perfect example. We had a client the other day who said, look, my wife still works and I'd like to retire. Okay. And I know he was looking at, well, I just want to buy houses and I want to get rental passive income. Okay, great. But we'll get to that eventually. But let's say, what's that income that you're looking to replace? So I always look at what's the end in mind. In this case, it was, well, we need to replace $5,000 a month in income. Then we back that out to say, okay, well, how much cash do you have to work with? Do you want to do that all in cash? Do you want to do that with IRAs? Do you want to leverage and use some financing? He was like, well, and let's look at the cash outlay that you're looking to do over time. And let's marry, okay, now in his case, it was all cash and IRA money. We looked at his funds and I said, all right, to replace $5,000 in income, how many houses is that going to take to give you the net operating income after all expenses, right? And I think in his case, it was only like somewhere between 8 and 10 properties, which he didn't have to do all at once. We can build that over a couple of years to get to where he needs to be. But he was so blown away to say, wow, that's it. Like, he had in his head that I'm going to have to buy 100 homes and it's going to take so many years to be able to do that. Once we looked at what his actual goal was and then backed it out to what it's going to take to accomplish that, because rental properties is really easy. While there's value and people understand value, and value can go up and down, in the rental game, it's really easy. I'm not going to speculate on what the market's going to do, on what the value is going to be tomorrow if the market goes up or down. Rental properties, to me, is very easy because I know what the rent is. I know what the rent is I can collect. I know what my expenses are. They're really not going to change, especially if you do an adequate rehab up front. And then I'm going to have that cash flow. The cash flow is going to return whether the market goes up or the market goes down or it stays stagnant and neutral. The rent's still going to come every single month because somebody needs somewhere to live. They have to pay for it. So we can predict what that's going to be, and we can build a portfolio around that. And then really it's just Do you have enough cash and assets that you want to do it that way? Or do you want to leverage and build more of a portfolio? And maybe your goals change because you realize how simple it is, like in this guy's case. He's like, well, if that's the case, maybe I should do 10,000 in income and have a better lifestyle. So we can work with you over time to do that too.
Yeah. Yeah. It's funny because, you can really predict, conservatively, I guess, what rents are going to do over the long term. I think much easier to predict than, especially if you're conservative and you don't get carried away. But, generally speaking, there's some markets, that rents go down every once in a while, but generally speaking, rents generally don't go down, right? I mean, they're constantly going up, at least at the rate of inflation, typically over time. So a little bit easier to predict. So, one thing I want to say to the folks that are listening to this, if you're listening to this, so I had somebody on the show recently that was he was 22. We're actually it'll be, I think it's coming out. Well, it's a show or two before this episode here. So if you're listening to this episode, we just released that show. He's 22 years old, started investing when he was 19. And when you hear that stuff, you're like, aren't you jealous of that? Like you didn't start earlier? Like always, that's what the whole purpose of the whole show was. Like, get started basically. Yeah. But if you're listening to the show, we're talking about people that are like, estate planning always has this connotation with like retirement, right? But if you're listening to the show right now and you're in your 20s and 30s, like get started with this stuff now, because there'll be a point where you can, the traditional retirement age and all that stuff, you just throw it out the window. Like retire way early. Like you can plan to just check out like way ahead of time for what most of your friends are going to do. So, yeah. Well, and of course the other big thing that we talked about with, this is an investing class, or we haven't talked about it, but this is an investing class, is that you can use leverage, right? So traditionally when you're doing the planning exercise, I assume you're looking at, well, here's how much money I have. And if I can get an 8% return, this is the dividends I'll get, or this is the increase in equity that I'll be able to generate over time or whatever. But real estate's a whole different animal, because you can easily lever that up to where even if you're putting traditionally like 20% down, whatever you have to invest, you have probably 5x that purchasing power, right?
Definitely.
Yeah.
Yeah. Leverage is a big deal. I mean, obviously you can extend your money more. It just depends on, again, the size of portfolio that you're looking to create an income. And then just like you said, it's very predictable. We're again, I'm kind of like you, we're very conservative and very safe. So most of the time when we're projecting things for people, we actually project it based on the fact that nothing's going to go up. Now we know that's unrealistic and it's going to, but if I play it safe and say, hey, this is not going to go up for the next 10 years, but here's what you're going to get over the next 10 years. And if you're leveraging, here's how fast that's going to be paid down. And we're still not saying there's any increase, so that we're being ultra conservative in our approach for what we do. But I think that's great, because if you make more than that, well, you're just a lot happier.
Yeah. Yeah. Well, we haven't talked a lot about where you primarily operate. You primarily operate in Southeast Michigan, right? Or the kind of the suburbs of Detroit and that area. And I know, we talked about this a little bit ahead of time. Sometimes when people hear Detroit, they're like, they think it's like the center of the universe. Like, don't go there, right? But what I know, you and a lot of other people that have really changed my mind on Detroit, because when I started to find out that the values of properties in the suburbs are equivalent to where I'm at in Dallas. It's like, so it's you kind of think of these like little bombed out neighborhoods, which when you go into some parts of the city, that's what you see. But if you stay out in the suburbs and other areas, it's a whole different world, right?
Yeah, totally. I mean, it's like anywhere. I don't care where you go in the United States. Detroit itself has had a lot of bad press, so people are drawing attention to it.
Right.
But the reality is, I'm sure you can find a horrible war zone area where you live now.
There's some pretty rough areas of Dallas that I'm sure are equivalent.
It's going to happen. Houston, Dallas, I don't care. Everywhere I travel, a common thing is there's always a very rough area for that city, and then there's the more populous area. Detroit is no different than that. Sure, if you're in the Detroit area, there are some pockets where I probably wouldn't want to get out of my car or drive through.
Right.
That's typical anywhere you go. But then in all the suburbs, they're nowhere near the city of Detroit. They're outside of it, and they're thriving communities. I mean, we have homes that are, neighborhoods that are $100,000, $150,000 neighborhoods, all the way up to the multi-million-dollar neighborhoods just a couple miles around the corner. Yeah. Most markets have stuff like that. Actually, in the suburbs of Detroit, we have I think it's one of the wealthiest zip codes in the country, like in the top 3 next to Orange County and La Jolla area. So that's in Birmingham. Birmingham literally is 5 miles from the city of Detroit's border.
Yeah.
So A lot of people, yeah, they hear
A lot of
Detroit, say,
misconceptions.
yeah.
One of the things though is I know in your business, so we'll talk about how you help investors ultimately with buying rental properties and then managing for them towards the end of the show. But one of the opportunities, one of the things that is really interesting about Detroit in that context is that there's not as much competition there as there might be in other markets where you keep rentals, because it has that negative connotation, even though you in your heart don't believe that any of that's true, or it for yourself. But it scares some people away, which makes it a better opportunity to potentially own, rental properties or even do fix and flips, right?
Yeah, definitely. There is a lot of bigger money, overseas money even, that's coming into the Southeast Michigan area because they recognize that. It's taken a few years for people to come around because they're bad press, but now that they're doing a little bit like, hey, there's still deals happening every day in that market. Wow. Yeah. So they started analyzing. There's a lot of overseas investors that contact us now to say, how can I dump a lot of money in your market? Have you help us do it? Because obviously they're overseas, they're not going to be there, and they need someone they can trust. But yeah, there's a lot of money coming into our market, and a lot less competition because there are the people that are afraid.
Yeah. I'm not prepared to give this quote at all, but there's this Warren Buffett quote about basically when others are, when others are excited about it, like run away. And when people are running away, that's when you need to get greedy and kind of dive in, right?
I think he uses that to relate to the market, right? Like when everyone's running from the market, usually when it's crashing, that's when he likes to buy the most.
Yeah, absolutely.
That's when he's able to buy the lowest. I love Warren Buffett's quotes.
Yeah, that's true. Truthfully, also the real estate investors, we talk about real estate investing all the time, but I don't know if you agree with this. A lot of people, I think, do, is that just happens to be the widget that we're buying and selling. But for us, we're ultimately in the opportunity business, right? We're basically trying to arbitrage opportunities that we find that happen to be in the real estate space, right? So,
yeah. No, I agree. Someone else said before, people don't recognize we're in a marketing business, right? It's marketing to find homes.
Right.
And there's a lot of intricacies, as we both know, that go into that.
Yeah.
And real estate just happens to be the product that we buy or sell at the moment.
Yeah. Yeah. Well, hey, I got a question of the week for you that I want to ask that basically kind of ties into a little bit of what we were just talking about Detroit specifically. So I know you primarily are not operating in the city and the suburbs, but what would you say is the biggest myth about investing in Detroit that most people have?
Well, the biggest myth is that it's the murder capital and everything's bad in Detroit, right? And it's the dangerous war zone and you can't get out of your car and you're not safe in Detroit. I would challenge you to fly in and go look at downtown Detroit. It's one of the most thriving places that's being completely revitalized. We have brand new Tiger Stadium down there. We have the brand new Lions that are about to start building a brand new hockey arena down there and building multi-million-dollar apartment and condo complexes. I mean, to give you an example that for me dispels a lot of the myth, Dan Gilbert, who a lot of know, owns Quicken Loans, owns the Cleveland Cavaliers. I think he owns something like 51% of downtown right now because he's continuing to pump money into buying commercial property down there. Do you think a man with billions of dollars pumps that kind of money into an area unless he knows something we don't and where it's headed, right? Yeah. So for me, that alone dispels a lot of the myth that's down there. But I personally have lived there and been around there, so I just know it's not what people think it is. They see the bad side of the news. The news, unfortunately, doesn't show all the good things most of the time of what's actually going down there, what's being built, and what's happening.
Yeah. Yeah. The good news doesn't sell newspapers or advertising in the media.
No, unfortunately, it doesn't. There's a lot of good. I mean, even with the new mayor, they continue to change a lot of programs. They're making it more advantageous to create better areas, get rid of the blight, put more streetlights in, all kinds of things like that are happening throughout the city.
That's awesome. Awesome. Well, let's talk a little bit about, why so many people, I bet there's a bunch of people listening to this right now. If this resonates with you, you'll understand where I'm going, that are interested. They know they want to buy real estate. They know I want to own rental properties. They see that as an opportunity, but they never get past actually doing anything about it. Yep. Why is that? Why do you think that is? I mean, it's of course you can't log into E-Trade and go buy something right now. It's a little more complicated than that, but I know that has something to do with it. But why else do you think that people, think about it and talk about it forever, but never do anything?
I think it's two things initially resonate with me because we do think about this all the time. So one is mindset, right? A lot of people are caught in the next shiny thing. So they're overanalyzing. They're thinking about it. They're reading this in real estate. Then they hear this guy talk about something different in real estate. And they're chasing this shiny object And they may spend tons of money trying to research that, but then again, never do anything because they haven't figured out the magic secret.
Yeah.
Secret is, we both know, is taking action and implementing what you actually learn and just doing it, right?
Yeah.
That's the 19-year-old to 22. It's because he just does it. He's so young that he's not overthinking it and trying to figure out the right way. The other piece that I see is so many people, we talk with a lot of people on the West Coast who recognize they're blown away by the returns that they can get over on the East Coast or in the Midwest. And it scares them almost that, oh, it's too good to be true, but I don't have time to fly out there and learn. So they scare themselves, and they recognize that there is potential out there, but they want that potential to be in their backyard so they can go touch it. Now they could fly out there and go see it, because unfortunately it's not on E-Trade, but there are a lot of providers and companies out there that work to provide that solution for you so that you can do those things. But that's it. I'd say it's mindset. They're trying to overanalyze and overthink the opportunity that there is instead of just pulling the trigger and taking action and making money. And then they want that opportunity in their backyard, even though it doesn't exist.
Yeah.
So they're going to keep, and that goes with the first one, right? They're going to keep searching for a way to make it exist in their backyard, even though it's not going to exist.
Right. Yeah. And it's, it's kind of a shameless plug. I think a lot of folks know, if you're listening, you don't know, you should check it out. But we started passiverental.com, this website, to help people that want to be a more passive investor, because my whole life as a real estate investor, and yours too, we've been active investors. We you got to find the deal. You got to figure out how to get the financing. You got to, you got to jump through hoops with cities and permits and all those things. There's a lot that goes into it. Finding deals is the hardest part of this business. And a lot of people, because of shows on HGTV or whatever, they never talk about finding the deal. They always just have the deal. Well, the deal's just there. And then it's all about the rehab and the journey. But it's the hardest part happened up front, and you never talk about that. No. And so I think a lot of people don't, realize yet, although people are waking up to it, that, hey, there's a different way. I can work with somebody that finds the deal, rehabs it, gets a tenant in it, and then manages it for me. And it becomes more of a Main Street type product then, right?
Yeah. Someone takes on all the headaches that you're afraid to take on, because you're right. The TV shows, they make it's golden. Deals just pop right in your lap, and then all you got to do is go through the fixing it up and sell it and make big money. Yeah. But they don't go into all the marketing, analyzing, deal evaluating, offers that are made, follow up, and all the things that go into actually getting that one deal that does do that. Yep. And then, they do show a lot of the rehab, but they don't show a lot of the dealing with the city, pulling the permits, having the inspections from the city come in, and all the things that can go wrong in a rehab, especially the larger it is, the more likely that there's something that's going to go wrong.
There's some things that could go wrong, right?
Yeah.
Yeah, I think, hopefully what we're doing through the website, through passiverental.com, and even through talking about stuff like on the show today, is try to educate people that, you don't have to go do all those things as an active investor. And truthfully, I think that's what keeps a lot of people from moving forward, because they assume they have to go do it all themselves, and they don't know where to get started. And as we talked about, just kind of the acquisition side, we talked about this before the show, just the acquisition side of our real estate investing businesses is a business in and of itself, right? You've got staff, salespeople, a lot of advertising stuff going on. It's a whole business all by itself, right?
Yes. A lot of intricate pieces moving every day to make that happen, just to get one acquisition and multiple acquisitions so that you have properties to do. And I think I love what you guys do with passiverentals.com, because you've already went and evaluated which markets are great returns for people, and evaluated why they want to work with certain companies that can solve most of those things for them, so they don't have to go out there and spend the time, money, energy, and resources to get it done. Yeah.
And what we're seeing is, there's a lot of people that also, especially if you're, I don't want to scare anybody away if this doesn't resonate with you, but most people don't want to buy one property. If you get to a point in your life where most people that want to own rental property, let me just tell you, don't have a goal of buying one rental property. Right. You're either going to have 100% vacancy or 100% occupancy. You're either going to love it or you're going to hate it. You really, just like everything, you need to have kind of a portfolio, because, I've had houses burned to the ground before, but because it was one in part of my larger portfolio, it wasn't as painful as it would have been if we just had one. Right.
Doesn't affect you as much.
Yeah. So, but most people aspire to kind of buy more over time, and unless you're a full-time real estate investor, the acquisition side is going to be difficult for you. So you might as well rely on somebody else to do that part.
Yeah, because they don't see all the cost associated with doing that part, right? Like,
Yeah.
again, seeing the show and I can just go grab a house. They're all over the place and get
Right.
one. Yeah, we're
Not
usually
quite.
evaluating hundreds of leads and whittling that down to the ones that fit a certain criteria to make
Yeah.
offers on, and then
Right.
going inspecting a bunch of them before we get that one deal.
Yep.
So again,
Yep.
it's big business on that end alone. You can
Yeah.
generate nothing but a business there for finding properties.
Yeah, absolutely. And then, even people that I always encourage people to, there's so many people that I know that I'm sure you're the same way, that buy some rental properties and they manage them themselves. They're like, I don't manage my own rental properties, but especially when you're getting started, you have like 2, 3, 4, 5 rental properties. You shouldn't be managing them yourself. What a nightmare. I mean, that's just, it eats your entire day up or your weeks. And it's just,
I had an attorney friend that did it in the beginning, and he actually joked about it. And he said he just hated getting the middle of the night toilet bowl phone calls, right? And that's what we have. I don't even manage my own rentals. I own the management company that manages all my rentals, but that's because there's processes and systems and people in place to do all of that stuff.
Yep.
It just makes life a lot easier. I don't get any of those phone calls. I just know the stuff's handled and I get my money.
Yeah, absolutely.
That's all that really matters to me.
I mean, if you do invest in the stock market and you're buying, let's say you're buying stock in Apple, like you're not swinging by the Apple headquarters to help mow the lawn, right? I mean, it's really no different ultimately. They should be investments that somebody else, there's some expenses involved, but I promise you, Apple has expenses that are eating up your potential profit, but they need to do those to run the business. So just
absolutely
outsource that stuff, right? So talk a little bit about what we call turnkey. And just how this has evolved. I think you've probably seen, obviously you've gotten into it over the last several years, but there's been this evolution of people that are becoming providers around the country that help provide the solutions that we're talking about today, which is making a much more passive solution for investors that just can't be actively involved. But tell us a little bit more about what that means to you.
So 2 things. What it means to be true turnkey, I guess I'll talk about, because there's a lot of people that misuse that term now because it's very popular, right? So there's the not really providers, but hey, I have turnkey, and it's not. So my true definition of turnkey is quite simply someone that you can work with in a market that has already built the business around being able to find and acquire properties, and they do it. Then once they go through all those steps of marketing, analyzing, inspecting, making offers, following up, and getting the actual deals, then they go through the process of closing that property. They purchase it into their acquisition, as we like to call it.
Yeah.
And from that stage, then they go through the rehab, right? They already have the contractors. They've already vetted the people. They work with the right contractors. They have a system in place to rehab this house, pulling all the permits from the city, getting it rental certified. A lot of people don't realize they need to do that. And if you don't, that can cause you fines down the road because you're not properly certified with the city that you own a rental property. At least in most cities, they have that. So it's all those processes through the rehab stage of getting all that stuff done. And here in turnkey, I think is the biggest, one of the 2 things that are the biggest difference, right? The biggest difference is the quality of rehab you do up front. And what do I mean by that? So what I mean by that is a lot of people, it's cleaned out, it's got a fresh coat of paint on, so I can put a renter in there and someone can live there. That's not enough in my opinion. That is what's going to cause you some grief down the road. You need to work with someone who's going to do an adequate rehab up front so that you don't have short-term maintenance issues, and more importantly, you don't have 3 years from now replacing a furnace that you could have replaced up front or putting in a brand new roof.
Right.
You overlooked it and thought you were saving money up front, right? Well, that saving money usually costs you money now because now you have water leaks and damage, you're in the property for multiple maintenance issues, and you're losing your money left and right and don't know why. I would suggest it's because you thought you were going to make more money by cutting a corner, and cutting a corner didn't make you more money. So we do extensive rehabs, right? New to newer roofs and windows are a good idea. New mechanicals are a great idea so that you don't have issues. We like to put in all brand new flooring. So one, not only just cleaning the carpet, we can check the underneath. Make sure the subflooring is good, the foundation is good. You can't see that without ripping the old flooring out.
Yeah.
Kitchens we like to update. We like to update all of the electrical, plumbing, bring it all up to code. So that's all done in the rehab to make sure you have short and less maintenance issues, if any. Your maintenance issues should be a tenant stopped up your toilet or a light bulb went out. Those are the type of maintenance costs we like to have because they're minimal costs, if anything. Then from that, you got to do an adequate job on placing a qualified tenant. So a lot of people will just, I just want to get it rented. Let me put it on Craigslist and get whoever comes that has money and put them in my property. That's another nightmare if you do it that way. You have to run their credit report. You have to look for do a background check. You have to look for recent evictions. You have to verify their income and that they can actually pay for the property, that they don't have utility collections, because most tenants, at least in the properties that we deal with, they're responsible for all utilities. So you want to make sure that they're in a history of paying your utilities. Then once you've done that and vetted and found that right person, it's moving them to the property and it's taking care of them. It's giving them 24-hour access to maintenance lines. So if they have any issue, whatever it is, you go out there and help them with it. Following up with them every month to make sure that there's nothing that they've ran into. So we treat a lot of our tenants like family, just because we know that if we treat them that way, they're more likely to be longer term tenants. They're better likely to take care of our homes, which helps us all build passive wealth. And then we create a lot of online technology. So there's a lot in there to help tenants pay us easier. We want to make their life easier. We want to make collecting from them easy too. And if they have any issues, we want to take care of them very quick. The biggest issue I hear with some companies there is that the management company never returns my calls. The management company never comes out and fix anything. And that's a big problem, because if your management company doesn't do those things and isn't on top of those things, that isn't going to help. So turnkey provider is someone, in my opinion, that does all of that, A to Z, from finding and acquiring the property to properly rehabbing the property to placing a qualified certified tenant, and then properly managing it and managing the expectations of the tenant. And then if they're working for investors, making sure that they're doing that for their investors as well, right?
Yeah, absolutely.
You should have on-time reporting every month. You should have online access to all of the technology is so vast today. There's no reason why you as an owner shouldn't have live access to everything and all communication that's happening with your property. If you don't, I would ask your company to do a better job. There are services that help them do that.
Yeah, it's really incredible. You know, if you're listening to this and you're managing your own properties, or you're going to start buying and thinking about managing your own properties, like I know in my mind that first off, I already know this from owning a lot of rental properties, is my biggest expense is turnover and then the make ready I have to do in between, by far. And so if you can minimize turnover, if you can, you talked a little bit about what your approach is, but a lot of people find ways to basically get people to stay for a longer period of time, make them happy. You don't have to go over there and give them a back massage or anything like that, but there's a way to make people feel like they're valued and make them feel like it's their home, so they want to stay there longer, right? For sure. And if you don't have the ability to kind of treat people that way, or the time that takes, and you don't have the ability to do maintenance and all these other things, then you're going to get hit more often with your biggest expense, which is going to be turnover and another make ready. It's as simple as that. And so, there's all these little things you say, well, how fast could I do a make ready? Could I do it as fast as somebody that manages hundreds of properties and has crews on call ready to go? No. Could I have, some of the I think there's a lot of technology in place today that's not that expensive, but could I be as good as a professional property manager company in these 5 or 6 different areas, from finding tenants to verifying them to make readies and all that stuff? And it's in every instance, it's no. And what's the cost associated with that? And why not just pay it to somebody that's going to do it better and save myself that cost and all the heartache associated with it, right? Yeah,
well, and you're right. With technology, as a management company, remember, you may be managing your own portfolio, 1, 5, 10, 15 houses, and it seems like it's okay, but you can't afford at that model to buy some of the technology that would make your life so much easier, because it just wouldn't be cost effective. But we have hundreds, if not thousands, of homes to manage, so we can afford some of the better technology that's more advanced to do it across the board for everybody.
Yeah. And if you do it yourself, what you can't afford is to go on vacation or to take time off or do other things because you're on call, right? I know if you were managing my properties, I don't have any properties through you right now, but if you were managing my properties, I'm already 1,500 miles away from you. It doesn't really matter where I'm at. I could be in Cabo. I could be anywhere, right?
Go enjoy your life and just
That's why we do this stuff, is for lifestyle reasons and wealth building reasons, not to create another job for ourselves. Who needs that?
Right. I think most people I speak with, and myself included, primarily got into this to have more time, right? So you can enjoy your life with your family and do what it is you want to do.
Yeah.
Sure, wealth building to me is a bonus to what happens with it, but the reality is we all want more time. Yeah, we're all striving to have more time with our family and work less. Yeah. And that's make your money work for you. Don't work for your money.
Yeah, absolutely. Well, for those of you that are listening in, we actually recently partnered with Robert and his company up in Detroit because we're trying to find great markets and great property managers that can help like members of FlipNerd or people that listen to the podcast to build wealth. And it's something that we believe a lot in. So we have a few different markets where we help people buy properties, but it's through partnerships with like Robert. So if you liked any of this today, this isn't intended to be a big sales pitch, but I'll tell you that this is important stuff if you want to build wealth. So if you'd like to talk to Robert and you'd like to learn more about opportunities up in the southeast Michigan area, just go to passiverental.com and there's a contact us button. You can just contact us and a member of our team will call you. We can help you like line you up with financing. We have some access to some of the top people. In fact, you don't even pay us anything at all. We do this like totally free because, truthfully, just to kind of put it out there, in the event that you buy a property through Robert, we just act as an agent and we get paid that way. So you don't have to pay us anything for our service. We answer any questions. We really want to kind of help people that listen to FlipNerd. So just go to passiverental.com and we'll connect you with Robert. Hey, Robert, anything that we didn't discuss today that you want to talk about here as we kind of wind it down?
No, I think we did a pretty thorough job, and you guys do a great job over there at Passive Rentals with helping them understand more things they can do with leverage and time and all of that. And
yeah,
the only thing I guess the only thing I would open up to add just from my background is some people think, well, I don't have any cash. You may be sitting on a retirement, an IRA or 401k or something like that, and don't even think of the fact, because again, going through school and the way you may have been raised and taught that the only place you can put that is in the market, there's a lot more advantages to you, and there's a lot more ways legally through IRS code that you can invest that in real estate and many other things that you have more control on what happens.
Yep.
So just don't negate the fact that you have multiple opportunities to make yourself wealthier and protect that wealth for generations.
Yeah, that's we don't have a lot of time to talk about that today, but that being able to use your retirement account to invest in real estate is so powerful that most people, there's been a massive kind of awakening of this lately, but it's still in its infancy as to where it's where it's going to be. So yeah, absolutely. Yeah. Well, Robert, hey, thanks for joining us today. Appreciate your time and your insights.
Yeah, thanks, Mike. Thanks for having me on.
Yeah. And for everybody listening in, thanks for joining us today. This was episode number 324. And so if you're looking for something to do, we have about 323 other episodes for you to watch out there. So we appreciate you following along and hope everybody has a great week.